Welcome to my midweek update, making trading easier for you, the retail investor. My name is Phil Grandy. I'm CEO of philsgang.com, a stock trading education group to help folks just like yourself. Let's talk about what happened yesterday. The market runs up 466 to Dow. On what? Well, they're saying everything's fine now. Powell's been wrong. Powell's been saying, I can't cut rates because with tariffs, the inflation's going to go up. It'll be terrible. They said, no, you're wrong. Look what happened. The CPI came in 0.1% less than estimated. 0.1%? Yeah, let's buy. It's proven tariffs are no longer going to affect the consumer. It's a proof right here. Here it is. Look at it. No, it's not. Here's what they don't understand. Remember, the supply line that you and I are buying our goods from is before tariffs. It's tariff-free. So what we're buying now is the old stuff. By the time we reach the Christmas area, where all the new stuff comes in for Christmas, that's when you're going to feel the tariffs. So for them to say, oh, this is proof that tariffs are not going to increase the cost of goods to consumers is just wrong. It's too early. Now, they ran off and bought stocks in the most overvalued stock market in history. I hope you bought your stocks a long time ago, especially gold. But look at this. 2024, 2025, the most overvalued stock market ever. Look at 1929. Remember when they were overvalued, what happened to them? They had a crash. What happened in 1966, 1999? Overvaluation, crash. We're right where we were in 1929. What are you, nuts? Next. If things are so good, why is it the hedge funds are now shorting the Russell? Now, the Russell is the most important group because that is the small and mid-cap businesses. That's the heart and soul of our economy. That tells us what's going on. Take a look at the chart. Back here in 2021, they shorted $20 billion worth of stock. They got a return of 25%. Look at that short, 25%. And we're talking IWM. Here they are today. Again, 20 billion, starting to short again. What is it that they know that all these other people don't know? They're running around buying anything they get their hands on. It's crazy. Also, not only do we have an overvaluation of our stocks, but look at everything else. Look at auto loans, car loans, mortgage loans, historic defaults. They're going into foreclosure. Historic defaults, delinquencies we have never seen like this before. And never did we pay 8% for a mortgage. The last time I think was in, 1920 maybe? 1990, or even early, 1990. That's crazy. So there's no good news here. Now, go to the stock market. You want to make sure you're not staying and trading heavily your stocks. Let me get down here and I'll show you that you're not trading your software. Right here, here you go. You're not trading your software stocks. Here you go. Because look at it. These are out of favor. Look at this. These are all software. CRWD, Adobe, CRM, Intuit. Now, Microsoft, okay, PLTR and Oracle, they're the only ones doing well. You want to be staying with your tech stocks. That's where all the money's going. NVIDIA and Microsoft and Apple and AVGO. That's where all the money is. So make sure you're staying in that group, but be cautious too. Okay? And again, remember that gold is what's doing so well. Now, why is gold doing so well? Well, it's not gold. It's the miners. The miners, GDX, up 72%. Let me put them up here for you. GDX. And I have all my members in GDX. Look at this. 72% for the first 6 months of this year, while the S&P is only up 8%. That's insane. Because what are we seeing? We know that more and more people are getting scared. Central banks all over the world are looking at us, our deficits. They're looking at it like we're crazy. And they're piling into gold. And the more people buy gold, that means the miners get all the action. They got to keep digging and drilling, and their earnings keep going up and up and up. That's why they're up 72%. Gold's up 30%. So that's where you want to be. You got to play defense. And the other thing you need to play defense is to make sure you know how to short a stock. Don't sit there and think you can hide in Coca-Cola or you can hide in Clorox. It doesn't work that way. There's no place to hide. So again, the market, the S&P right now, everybody thinks, oh, this market will never stop. It will just keep going up. Really? I don't think so. At some point, remember, it's going to fizzle out. And if it wasn't, then why is it that the hedge funds are shorting the Russell? And here's your S&P right here, okay? So the S&P keeps going up because you got the tech stocks in the S&P. So keep your eye on the tech stocks. The other thing you got to keep your eye on, of course, is the 10-year Treasury yield. The 10-year Treasury yield, here's what Trump is betting on, that the more tariffs he can bring into the United States, the more money comes in, the 10-year Treasury yield goes down. That affects, remember, credit cards, automobiles, your mortgages, it affects almost everything, lines of credit for businesses. He thinks he can get that down with all these tariffs. Watch that 10-year. If that 10-year keeps going up instead, he's in trouble. So you got to watch that 10-year Treasury, watch your gold. There's only a few, again, stocks. They're doing all the heavy lifting. That's the tech, not the semis. We're talking about the tech. We're not talking about the software. We're talking about the tech. That's where all the money is, a handful of stocks. So that's my midweek update. I hope you enjoyed it. I hope it helps you. And for further education on trading, just go to philsgang.com and we'll help you. It's free for 10 days. Check us out.